This is Nightly Business Report with Bill Griffith and Sue Herrera.
I think in some ways it's better to wait till after the election with China.
President Trump hints at a China trade deal delay until after the presidential election, rattling investors and sending stocks lower.
Going broke. As many as 1 in 5 small private colleges is facing financial stress, creating a new kind of college debt crisis.
Giving Tuesday, why many Americans are cutting back on their charitable contributions. Those stories and more tonight on Nightly Business Report for Tuesday, December 3rd.
And we do bid you a good evening, everybody, and welcome. If Wall Street had seemed quiet recently, well, it's starting to wake up. Stocks fell sharply again today, this time after President Trump suggested that there could be a delay in a U.S.-China trade deal. There were also reports that the White House could move forward with those new tariffs on Chinese goods that are scheduled to take effect on the 15th. That created concerns about the fragile global economic recovery, and it pushed stocks lower again today, with the Dow down 280 points at the close. It had been down more than 450 at one point. The Nasdaq dropped by 47. The S&P slid by 20. The president made those comments, by the way, during that NATO meeting where he also threatened levies on France and took aim at French President Macron for comments that Macron made that were critical of the NATO alliance. Hadley Gamble is in London for us tonight.
Day one of U.S. President Donald Trump's visit to the United Kingdom and already explosive comments on U.S.-China trade, roiling markets across the United States, suggesting that a U.S.-China trade deal could happen, in fact, after the 2020 election.
I have no deadline, no. In some ways, I think it's better to wait till after the election. You want to know the truth? I think in some ways it's better to wait till after the election with China.
President Trump not stopping. They're addressing the tit-for-tat directly between French President Emmanuel Macron and Turkey's President Recep Erdogan.
That is a very nasty statement to essentially 28, including them, 28 countries. I think that, you have a very high unemployment rate in France. France is not doing well economically at all. They're starting to tax other people's products, so therefore we go and tax them. It's just taking place right now on technology, and we're doing their wines and everything else.
All of this amid massive protests across the United Kingdom, especially here in London, ahead of a collegial evening billed by the Queen as an opportunity for NATO leaders to meet and decide the future of the transatlantic alliance. For Nightly Business Report, I'm Hadley Gamble at Buckingham Palace.
Not only did President Trump exchange barbs with France's president, but the Trump administration last night proposed levies of up to 100% on more than $2 billion worth of French imports. And Kayla Tausche has more on that from Washington.
As President Trump and French President Macron discussed NATO, Turkey, and ISIS, hanging over the conversation, new tariffs proposed by the U.S., hitting back at France for a 3% tax on large U.S. tech giants. Trump saying France shouldn't have that right.
The techs, they're American companies, the tech companies that you're talking about. They're not my favorite people because they're not exactly for me, but that's okay. I don't care. They're American companies, and we want to tax American companies.
Trump left the door open to work out a deal with France before the taxes on French luxury goods goes into effect mid-January. But it's a window into larger trade troubles between the U.S. and Europe, where talks have stalled and bargaining chips are few. This is the second round of tariffs hitting France in 2 months after the U.S. targeted European products to offset illegal Airbus subsidies. And it comes just weeks before $160 billion in consumer goods made in China could be hit if that phase one deal doesn't come to fruition. Mr. Trump said today it might not. Administration officials have been loath to escalate tensions on multiple fronts of the trade war at once. But heading into an election year, President Trump wants wins and results to show to American voters. And to get those, he's turning up the pressure on adversaries and allies of the United States. For Nightly Business Report, I'm Kayla Tausche in Washington.
So what happens to the markets and the global economy if a trade deal is delayed until after next year's presidential election? Joining us with their thoughts tonight, David Leibovitz is the global market strategist at JP Morgan Asset Management, and Bill Lee is chief economist with the Milken Institute. And Bill, I'm going to start with you. You're among those who feel that the president's statement today was more just about saber rattling, a negotiating tactic of some kind. But let me ask you this. How important is a bilateral deal between the U.S. and China to the global economy?
It's important because these are the largest economies on the face of the earth. So we need to have trade settled in a way that shapes the trade patterns for the 21st century. And these market access to these two markets are really critical. So phase 2 and phase 3 of the deal is going to be to determine intellectual property and market access. Those are the things that we're waiting for. But to get there, we have to get through phase 1. And that means that we have to get the simple stuff out of the way. President Trump has decided to delay that, I think, because strategically he wants to be able to appeal to his base to show that he's a tough negotiator. And also, in some sense, he's trying to soften up the Chinese side so they can get more on the phase 2 and phase 3 issues. Okay.
And David, how do you see it, especially from the Wall Street perspective? We obviously saw a fairly vehement reaction from Wall Street, especially in the early part of the trading session.
So, I mean, I would echo a lot of what Bill said. I think that there's an aspect here of the administration trying to maintain their voter base and maintain support with the presidential election just less than a year away. From a market perspective, I mean, I've been saying for the past couple of weeks, it felt like the stock market was getting a little bit ahead of itself. It was pricing in a trade deal that, frankly, we didn't really have any facts around. And so what this is to me is really just more of a consolidation rather than the beginning of a collapse. I think the administration understands it's very important for the economy to be expanding, for unemployment to still be low when the election rolls around next November. So I think that this is probably a bit of a pause from a market standpoint, but not the end of the cycle.
But David, do you think that a phase 1 has already been priced into this market at this point?
Absolutely. I think that equities, contrary to what the bond market was telling us a few months back, right, equities have taken this at face value and said, okay, they said they're going to do a deal, so now they're going to do a deal.
Well, how patient do you think Wall Street will be waiting for that phase 1 deal to be completed?
And that's really the key. I think that investors are far more willing to be patient when the fundamentals are supportive. Unfortunately, the fundamentals are beginning to look a little bit flimsy. Earnings growth looks like it's slowing down. The pace of economic growth should slow next year as well. So I think this is going to be a real balancing act for the administration to not upset the apple cart by going too far on pulling back on a deal with China.
And Bill, would you agree with that and the fact that we are seeing a little bit of deterioration in some sectors of the market and also the economy?
I would warn that it's not the quantity of growth, but the quality of growth. Yes, we are slowing down to below 2% growth, but if we were able to get growth supported by investment spending, that would be the best way to boost productivity, increase real wages, and ensure that workers are getting the kind of money they need to sustain the consumption that has continued this economic expansion to the longest in World War II history. But the fact that investment has slowed down because of not so much trade uncertainty, which has certainly contributed, but the slowdown in Europe and China has really diminished anybody's hope to try to want to expand capex spending because the global economy just isn't there to supply the demand to support any kind of real investment spending. So I think firms are now waiting for Europe and China to really show signs of growth.
Very quickly, Bill, who has more to gain from a deal, China or the U.S.?
I think it's pretty even, but I think China on balance will gain more because they're much more manufacturing based and they're much more dependent on trade.
David Leibowitz with J.P. Morgan Asset Management, Bill Lee with the Milken Institute. Thank you both.
Thanks for having me.
Thanks for having us.
Time to take a look at some of today's upgrades and downgrades. Netflix was downgraded to neutral from buy over at Citi. The analyst cites Netflix's lack of pricing leverage and says the stock is overvalued. The price target is $325. The stock fell 1% to $306.16. Boston Beer was upgraded to buy from neutral at UBS. The analyst expects double-digit sales and earnings growth in 2020 and 2021. The price target is $440. The stock rose more than 2.5% to $383.91.
Facebook was given an overweight rating in new coverage at Piper Jaffray. The analyst there says the company is now well positioned after a few turbulent years. Price target now $230, but despite that overweight rating, the stock fell a fraction today to $198.82. And Roku's price target was raised today to $200 from $150 at Needham. The analyst called Roku the winning aggregator of TV and films. The firm has a buy rating on that stock. Stock rose more than 6% today after that big decline yesterday, now at $144.63.
Still ahead, the other college debt crisis.
Small, private, liberal arts colleges, a staple of American academia for centuries, are an endangered species. I'm Scott Cohn in Hiram, Ohio, where one school thinks it has the key to survival. We'll have that story coming up on Nightly Business Report.
A transition of power at Google parent Alphabet. Google co-founders Larry Page and Sergey Brin are stepping down from their roles within Alphabet. Page was Alphabet's CEO while Brin was president. Both had taken a step back from day-to-day operations. The current Google CEO, Sundar Pichai, will take on the added role of Alphabet CEO as well. Shares rose a fraction on the news in extended hours trading.
As expected, Cyber Monday's online sales hit that record of $9.4 billion, up nearly 20% compared to last year. According to Adobe Analytics, shoppers not only bought more, they also purchased pricier items, and nearly one-third of the day's total came late in the day between 10 p.m. and 2 a.m. Eastern Time.
Well, the big three automakers no longer report monthly auto sales, but we did get numbers from some foreign car companies. Toyota said its North American division had its best November ever, with sales rising more than 9% from a year ago. Honda sales rose 11% thanks to demand for sport utility vehicles and trucks. But Nissan saw sales drop about 16%.
This is a crucial week for the oil market, with prices up more than 20% so far this year. Members of the OPEC cartel are meeting on Thursday to talk about ways to push prices even higher. As a result, they're widely expected to either maintain or increase current production cuts. Here's Brian Sullivan.
OPEC meets on Thursday in Vienna, Austria, and this meeting may be one of the most important in years for three big reasons. It's the first meeting with Saudi Arabia's new energy minister, Prince Abdulaziz bin Salman, one of the sons of the king and half-brother to the crown prince, Mohammed bin Salman. Replacing the former Saudi energy minister with a member of the royal family shows just how important OPEC's choices have become. Equally important to the kingdom, the long-awaited IPO of Saudi Aramco. That offering also prices on Thursday, the day the OPEC meeting begins. Its performance should add another layer of drama to the meeting. And finally, can OPEC move prices higher? Production cuts were extended at the July meeting, but oil hasn't budged. It's been stuck in the mid-50s. That's bad news for U.S. oil producers and their investors, who have all but given up on energy stocks, spooked by heavy debt loads and a struggle to remain profitable at current prices. The biggest oil-related ETF is down 25% since that July meeting, with other stocks down much more. There are very real concerns about a flood of oil-related bankruptcies next year if oil prices don't move higher. Many companies simply can't make any money at current prices. OPEC nations want higher prices, especially Saudi Arabia, which has huge social costs to pay for. But they also likely know that higher prices could keep the U.S. shale boom going and the world oversupplied with oil. OPEC, which has often been considered a four-letter word in American oil circles, may ironically now be the one group that has the power to rescue the debt-laden American oil companies. For Nightly Business Report, I'm Brian Sullivan.
A merger made of steel. That's where we begin tonight's market focus. Iron ore pellet producer Cleveland Cliffs is buying AK Steel, which makes stainless steel and electrical products. The price tag for more than $1 billion. The deal is expected to close in the first half of the year. Cleveland shares fell more than 10% to $7.51, while AK rose 4% to $3.01. Audentes Therapeutics agreed to be bought by Japanese pharmaceutical company for about $3 billion. That is a premium of more than 100% for the U.S.-based gene therapy company. And Audentes shares more than doubled today to $58.93. Amazon is using next-generation 5G technology to help businesses download data from the cloud faster. At launch, it's partnering with Verizon to incorporate the new service called Wavelength, which will help transfer data at a faster rate. Verizon was up a fraction to 60-14, while Amazon shed a fraction.
Land's End reported better than expected earnings and an unexpected increase in comparable store sales as well. But the closing of Sears stores caused revenue to slip because Sears housed a number of Land's End shops. But investors did like the results. They sent Land's End up about 21% today to $14.24. California regulators are blaming PG&E for failing to inspect and maintain transmission lines that caused last year's so-called Camp Fire, which was the deadliest in the state's history. That finding was part of a newly released 700-page report. PG&E has already apologized for the role that its equipment played in that tragedy. Shares rose nearly 8.5% today to $8.52. And MasterCard said that its board has authorized a new $8 billion share buyback. The company also raised its quarterly dividend by 21%, and the stock rose in initial after-hours trading as a result tonight.
It is crunch time for millions of high school seniors and their parents. This is college application season, and this year there is more to stress about than just getting in. A rash of colleges are shutting down, particularly small liberal arts schools. Scott Cohn reports on how families can protect themselves and how one school in Ohio is trying to buck that trend.
At Hiram College outside Cleveland, with about 1,000 students, they knew small liberal arts schools were not exactly in vogue. Their solution? Change the definition of liberal arts.
We looked at the curriculum, we looked at the graduation requirements, we looked at technology, we looked at the 21st century skill set and mindset that students need to demonstrate to employers.
Gone are stodgy old majors like art history and religion. In are more career-oriented majors like criminal justice and sport management.
I think they do a really good job of preparing you for your career, but also in life.
Hiram's president says the changes, which have also included reducing the faculty by 20%, helped convince lenders to refinance $25 million in long-term debt and put the school on solid financial footing. But other schools are having a more difficult time. It is the other college debt crisis, the schools. Credit rating agency Moody's says 1 in 5 small private colleges is under fundamental financial stress. Many won't survive. Demographics are changing. Fewer students are graduating high school. Those that do are increasingly looking for more career-oriented colleges. When all is said and done in 2019, 15 small private colleges will likely have shut down, 3 times the rate a decade ago. And this could be the new normal.
It's here to stay. I think we see the higher education sector as in a period of real transformation in terms of how students learn, where they learn.
And some schools are closing with little warning, like Mount Ida College in Massachusetts last year.
I didn't get the degree. I didn't get the diploma. I am cheated.
Experts say before deciding where to go to college, students and parents should be asking not just about financial aid, but also about the school's finances.
Is the college able to pay its debt? Is the college in good relationship with its bank? Has the college received a clean bill of health from its accreditors?
It could be the difference between just getting into college and being able to finish your degree there. For Nightly Business Report, Scott Cohn, Hiram, Ohio.
And coming up, donations dry up, why fewer Americans are giving to charitable causes.
A new Navy ship is about to be christened, a symbol of the Navy's modernization efforts and the money that it costs. Here's Morgan Brennan.
Once delivered to the Navy, it will be a floating city, capable of accommodating more than 4,600 personnel and 75 aircraft. Nuclear powered and weighing in at nearly 100,000 tons.
The aircraft carrier Kennedy is the second in the class of the Gerald R. Ford aircraft carriers. We actually had the first cut of steel in 2011. We laid the keel in 2015, and since that time, literally thousands of shipbuilders have brought their skill and their integrity to get the ship to where she is right now. The ship today is about 67% complete.
The USS John F. Kennedy is a $13 billion aircraft carrier built here at Huntington Ingalls Industries' Newport News shipyard, a division overseen by Jennifer Boykin. The Kennedy will be christened this week, formally given its name by the late president's daughter, Caroline Kennedy, beginning its journey toward service in 2022. Huntington Ingalls Industries is the prime contractor, and CEO Mike Petters says the company is taking advantage of technologies to make the ship more lethal and drive down costs, with a design expected to save the Navy $4 billion over the Kennedy's 50-year lifespan.
We are now moving from the Ford, which was the first of the class, into production. And what that means is the first ship is as the lead ship. It's not just a production unit, it's also a prototype where you're testing out your design, you're testing out your training plans and your labor plans and your supply chains, and you're doing all of those things. And now on the Kennedy, we've been able to move past the prototype phase.
The USS Ford has been fiercely scrutinized due to delays and cost overruns. But Huntington Ingalls and the Navy both say man hours on the Kennedy are down 16% versus that first-in-class ship, translating to savings.
This carrier is the last aircraft carrier that will be built with traditional blueprint drawings. The carrier that follows the Kennedy, the USS Enterprise, is the first aircraft carrier that's going to be built digitally.
And the program is just one example of the impact higher defense budgets and a push to modernize the military are having at this shipyard, which has hired 10,000 workers in just the last 3 years. Huntington Ingalls is also, alongside General Dynamics, building the fast-attack Virginia-class submarine with a $22 billion contract awarded just last night, the largest in shipbuilding history.
Since there's significant overlap in our supply chain between the submarines and the aircraft carriers, it goes well with the 2 aircraft carrier contract that we got back at the beginning of this year. All of that pushes our backlog up close to $50 billion.
For Nightly Business Report, I'm Morgan Brennan at the New York Stock Exchange.
Finally tonight, the U.S. currently ranks as the most generous country in the world. That's according to the World Giving Index, which asked more than 1 million people whether they had helped a stranger or donated to a charity recently. But charitable giving here in the U.S. is on the decline. So on this Giving Tuesday, we asked Robert Frank to take a closer look at those numbers.
Charitable giving is down more than $50 billion as of the latest IRS filings. That is the largest decline since the Great Recession. Charitable giving totaled $103 billion in 2018. That's according to the most recent IRS filings. That's down by $57 billion, or about a third, from 2017. Now, the likely reason? The Tax Cuts and Jobs Act. The new tax law doubled the standard deduction to $24,000. Now, if you take that deduction, you can't itemize your taxes or take a deduction for charity. So the reduced number of Americans who itemized their taxes led to a lower number taking a charitable deduction. About 37 million Americans used to itemize. Now it's about 16 million. Without the tax benefit, millions of Americans either stop giving or are giving less. Now, the final numbers for 2018 will be out in mid-December, and those numbers could rise as the latest returns are filed. And since high-income earners still itemize, they are still giving to charity and could make up a large share of charitable giving. But nonprofits and many politicians are scrambling for ways to bring back the tax incentives that make Americans more charitable. Republican Congressman Mark Walker today introduced a bill that would allow taxpayers to take a charitable deduction even if they don't itemize. Similar bills have been introduced by congresspeople from both parties. But without a tax break, giving is likely to remain flat or even continue to decline. For Nightly Business Report, I'm Robert Frank.
Before we go, here's another look at the day's final numbers on Wall Street. The Dow fell 280 points, the Nasdaq dropped 47, and the S&P 500 slid 20. And that is Nightly Business Report for tonight. I'm Sue Herrera. Thanks for joining us. And we want to remind you that this is the time of year your public television station seeks your support.
I'm Bill Griffith. Thank you very much for that support. See you tomorrow.